All right, this is going to be portfolio update number 28. Some big dividends this past week, and looks like the portfolio has been pretty stagnant, staying in that 83K mark. I don't think I did any. No, I didn't do any buys in my active part of my portfolio, but I actually forgot to put in an order for today, I think. So I'll go over that. But anyways, welcome back for those of you who have seen the other videos. And if this is your first time watching, welcome to the channel. I go over my entire M1 account. As you can see here, my M1 net worth is $83,500, and this consists of two portfolios. So if we go here, the invest tab, this is one of the portfolios. I titled it, or it was titled rather, 2030 aggressive. It is majority, you can see here, 89.5%. Majority of it is in this 2030 aggressive pie, which is an expert pie offered through M1 Finance. And it's mainly a bunch of ETFs through Vanguard. But this is my more passive investment, or the more passive side of my investment strategy right now anyways. Eventually I want to go just all individual stocks, but right now, since I'm still learning about how to be a solid investor, I'm sticking to, setting aside half of my investment money towards this 2030 aggressive pie, and then half of it into individual stocks. And then just a small position in Apple. But the other half of my M1 account is this portfolio right here, the high dividend portfolio. So when I made this portfolio, I had the idea of wanting a high dividend. So I think I don't know, I think I considered anything over 3% a high dividend at the time. But now my philosophy has changed a bit, and now it's not solely to focus on the dividend, but rather to focus on a good business with good fundamentals behind it. So this is a view of all the individual stocks that I have. Actually, let's just go. So right now it's sorted by value, but let's look at what the stocks have been doing the past week. So AT&T looks like it's up 5% from last week. A couple news about it. Warner Brothers Discovery up 2.7. This was a spinoff from AT&T. American Financial Group 2.69, Citigroup 2.4, Lockheed Martin 1.8, Walgreens 1.4, T. Rowe 1.4, Procter & Gamble 1%. Same thing with Costco, Cisco 0.8, Coca-Cola 0.6, and then the rest of these stocks are down this past week. Old Republic International 0.04%, WPC 0.24, Best Buy 0.58, Johnson & Johnson 0.84, Ultra Group 1.89, Home Depot 3.5, HPQ 4.7, and 3M 6.47. So I'm not sure. 3M's back down again. Oh yeah, that's right. I think the management said that they expected like slow growth. There it is. I didn't read the full article. I just read the headline. So I don't know exactly what management went over, but I guess that's why people are selling off at 3M right now. But so these are my two accounts that make, or I'm sorry, these are my two portfolios that make up my entire account. And if you haven't seen any of the other videos, I'll go over any activity I've done the past week, including dividends received, any buys, any sells, anything like that. So let's go over it now. Deposit, this was on the 16th because I got paid. But let's go from the 13th because that was last Wednesday, and I made the video last Tuesday. So I'm not really sure what this is, to be honest. Securities lending interest of 0.01%. We got a $24 dividend from Home Depot, a $52 dividend from Old Republic International. And then my deposit of $316.50. Like I said earlier, any money that I put towards investing, half of it will go towards this portfolio and the other half will go towards the passive side. So you're going to see a deposit of $316.50 in the passive side of the portfolio. So let's go. And I don't know if I went over these dividends in the last video. Honestly, I don't remember, but yeah, September 12th. I might have got these dividends like after I made the video. I don't know. I don't remember going over them, but 3M $141, and then Walgreens $37.45. In case I didn't go over them, I'll have to check before I post the video. But that's all the activity for this portfolio. And then let's go to jump over to this one, the 2030 aggressive. So some security lending interest, 15 cents. On the 13th, $25 or $24.23. And then there's my deposit. And then on the 18th, I did $75 because I missed 3 days. I missed 2 days. So on that third day, $25 each day was $75. But now, since we're on the 19th and I didn't put one in for today, I'm going to put one in right now for tomorrow. So we'll go here, manage, buy, I'll put in a buy order. So to make up for today, $25, and then for tomorrow, $50. I'm sorry, $25. So $25 for today and tomorrow, that'll be $50. There we go. That way I don't forget. Outside of that, nothing has changed in my portfolio. I haven't sold off anything yet, but I'm getting close to wrapping up the book One Up on Wall Street, and I'm gonna start putting each of these stocks into categories. Like right now, I think 3M is a turnaround, and I think it has potential upside, so that's why I heavily invested into it. But I still got to do, further analysis into 3M. There's a bunch of, I took notes while I was reading the book, and so there's a bunch of, I guess, metrics that you can call them that I want to compare with the fundamentals of 3M. So I'll eventually do that for every stock, and then I will start selling off positions and concentrating in certain other positions. But yeah, that's my entire account. And there was something I wanted to go over. So part of the reason, like I said, that I titled this portfolio High Dividend was because of the high dividend. The other reason I'm remembering now is that I wanted to set my portfolio up to where I got paid dividends almost every week. And so I looked up when each of these companies paid dividends, and I tried to line up as best I could so that every week throughout the year I would be getting paid a dividend. And so that's also another reason why some of these stocks were chosen, is because they paid a dividend during a certain time of the year, and it worked out with my portfolio. Again, that's not a strategy I would recommend. It's just what I did initially, because I figured if I can get a dividend every week, I could reinvest it, and the more money I could reinvest as quickly as possible, the quicker the portfolio would grow. So, but after reading Peter Lynch's One Up on Wall Street, listening to it, I have a different focus on how I want to invest. So again, I'll make a video once I finish the book. I'm on the last couple of chapters, and it's not that I'm a slow reader, but I put it off sometimes, even though I shouldn't. But I'll finish it, and then I will post a video, and I'll let you guys know where I stand with all these positions and the plans moving forward. And then you guys will see eventually I'm gonna sell off, or maybe I won't sell off the 2030 aggressive, but I'll just stop contributing to it and then just start investing all my money into this account, into individual stocks. But let me know what you guys think. Let me know if you guys got any questions, and I'll see you guys in the next video. Peace.